Stop scalping the markets. That's my advice to many traders out there. So, when it comes to scalping, there's just a few things to consider and that I want to go through with you. So, the first thing when it comes to scalping the markets is that people are out there trying to get you to scalp and day trade. Because it's sexy, it seems to be sexy and all of that. Most people that day trade and scalp the markets lose money. More of them lose money than people who swing trade. So that's my general advice. And I'm not talking to, therefore, people who are experienced in the markets. And don't think that if you're a year in, you're experienced, because you're not. So when I'm talking about experienced traders. So for most people, so therefore why can't they scalp? Why can't they do it? Well, just bear in mind, the people out there trying to encourage you to do it, it's in their vested interest to encourage you to do it, because whether they are maybe recommending you to trade a lot because is indirectly making them money from recommending you to trade a lot, or I'm trying to think of a load of reasons now. Buy their courses or their training material because that, again, it's sexy. All of that sort of stuff. I don't know. And you've got to bear in mind, I'm coming at this as a day trader, an ex-day trader myself. I've come at this because I've now, as a result of the last 20 years, met so many people who get into day trading who do just lose money. So it's not that you can't make money from scalping the markets, but the odds are more stacked against you than if you don't. So let's go through a couple of reasons. Firstly, let me take this down to a 1 minute chart. I've just got this on the euro dollar on a 1 minute chart here. So forget the fact that it's moving a lot here. Let's use this. Right. So, the euro dollar, let's say you got into this euro dollar, you're a scalper. So you've got in, for argument's sake, I'm just making this up. Once we close through, let's say, this prior area of congestion here, so once we close through that, so therefore you bought, for whatever reason, at 109.15, and you're looking to run it to 109.19. So that's 4 pips. Yeah, that's a classic scalp. Okay, so let's just bear with me a second. Okay, so let's assume, so you've gone out there as 4 pips. So if we look at typical sort of spreads on the euro dollar, so I've got just a typical order ticket up here for a euro dollar contract. And the spread here is sitting at around about 0.6 of a pip. Okay, so let's see if it moves. The euro's really not moving a lot here. It's a really dull day. On the 1 minute chart, looks like a lot, but it's really not moving a lot. I think it's been in less than a 30 pip range here on this particular day. So we're not seeing this. But normally, there you go, it's just gone to 0.7. So, it might go to 0.8. or more, depending on the volatility. But there's not a lot of volatility here today. So you've got out for 4 pips. My point is, let's take into consideration that you got in at, it's on the move now, that you got in at 109.15 and you got out at 109.19. So you've got a 4 pip gross profit, less that 0.6 or 7. So taking into consideration any slippage on your entry and exits, let's say that the total spread was 1 pip. So you're paying 25% of your profit is in spread and slippage. And that is huge. And bear in mind, you're going to have plenty of scalps that don't work as well. That alone makes it more difficult to be profitable scalping, just the costs of doing business. Okay. Now you could say, well, I found a broker, Charlie, that have zero spreads or 0.1 or whatever. Well, you've got to be careful with that, with a broker that's offering that, because that's not even the market real spread. So it means that they're a market maker broker, which means that they're going to have a vested interest in, you know, getting you slippage and all sorts of things on spikes in their prices and stuff. So I wouldn't even bother. Now, you could go for, if you've got a larger account, you could go for a broker that offer ultra low spreads, but then you pay a commission, and that's fine. But again, that would be the best way of doing it, really. But again, for a lot of people out there, they're not trading on larger accounts. They're trading on small accounts, and so therefore, again, they probably shouldn't be doing it. So another point when it comes to scalping is the other one. So you've got the costs here, you've got experience, as I've sort of touched on. But what comes with the experience is emotions. And so emotions, the more that you trade, especially intraday, look at how quickly this is moving around on a 1 minute chart. It's moving around a lot. So you're going to get much more emotional watching the price action of on a very small time frame. This is just a 1 minute chart. Look, here it goes. This is just a 1 minute time frame. And look how exciting, so to speak, it looks when it's moving around. So if you've got less experience, and therefore what comes with less experience normally is you're more likely to get emotional, is the more emotional you get, oh my God, it's moving over this way or that way, you're more likely to make trading errors and jump into prices, to price action, and jump out of price action as well, because you're looking at small time frames and there's temptation going on all of the time. So that then therefore entices you into overtrading and to making more so just general trading errors of jumping in, jumping out, and all of that. So for those reasons alone, and by all means, pop your comments in the comment section to this video if there are any other reasons that you want to give. But for me, it's psychological. Because the shorter the time frame you're trading on, the more experience you need. You know, anyone who's been trading less than a year or two shouldn't, in my view, be trying to scalp the markets. So if you have been trading less than a year or two, focus on the slightly higher time frames, maybe hourly charts and above. You'll still have plenty of trades. You don't need to be sitting there scalping, which is much more risky, and it's risky because of the psychological side. Plus, if you're only trading on a few £1,000s or dollars, then it's unlikely you're going to get the very best spreads, which means that things like spreads are going to act as a detriment to your trading as well. Even if you were trading well without all the emotions, then spreads, the costs of scalping are high and eat into those profits. So those are my general thoughts for this weekend. I'll be back next Wednesday, of course, for the next video. There's been a fair bit of volatility. I've been away just for a week, going back to the daily charts here, looking at the euro dollar over into this past week. Just been away for a week, and of course the stock markets, if we could bring up the S&P, we had a fair bit of volatility, but now I'm back. It'll probably be quiet as it is this Friday as I'm recording this. Anyway, have a lovely weekend. I'll see you next week.